Today we will explore a revolutionary investment plan in the exciting world of cryptocurrencies, specifically on the Pulse blockchain. This exponential approach backed by mathematical evidence seeks to maximize growth potential and offer protection against market fluctuations. How do we achieve this? With an application called TimePaysMe developed by Mati Allin. Get ready to discover how locking up your assets can be the key to long-term success in the cryptocurrency market. We will begin with the theoretical framework. Linear or logical mathematical thinking empowers us to organize the connections present in our mind, following rules and being sequential. However, on certain occasions, this approach limits our ability to explore new ideas. To address the investment proposals presented here, it is essential to embrace an exponential thinking approach as a methodology that focuses on creating innovative and revolutionary solutions. I start from the premise that over time PLS and PLSX will tend to increase in value. The Pulse blockchain has all the fundamentals required to do so. I will begin with a mathematical evaluation and try to find elements or fundamentals that justify my investments. From now on, I want to make it clear that this analysis does not constitute investment advice but merely mathematical advice. I will start with Bitcoin. According to a Cointelegraph article, 12 years ago, the first price of Bitcoin was set and a user bought 50,000 Bitcoins for $35. How much would those $35 be worth at the historical maximum of $66,136 per Bitcoin? The answer is the astonishing figure of $3,306,800,000. I continue with Ethereum. Ethereum was launched on July 30, 2009 at $0.30. In 10 years, its value reached its all-time high. This means that $100 worth of Ethereum purchased at the launch price would be worth more than $1.63 million at the all-time high. Similarly, BNB from the Binance Smart Chain launched at a price of 11 cents. 5 years later, the price achieved an increase of 396,000%, reaching a value of $436. It means that $100 worth of BNB bought at the time of launch would have turned into more than $396,000 in just 5 years and into over $792,000 at the all-time high. Is it difficult to imagine that a similar scenario could occur on the Pulse blockchain? My mathematical analysis suggests yes. Will the growth of the Pulse blockchain be exponential? The laws of large numbers explain why the average of a random sample from a large population will tend to be close to the mean of the entire population. If the Pulse blockchain reaches the average growth of large blockchains, then there is no doubt that we are facing a maximum financial investment opportunity. Conservatively, within a timeframe of 5 to 10 years, the PLS currency of Pulse chain could reach a significant value. How much? I don't know, nobody would know. What I do know is that it would be very significant. Would it be worth investing $100 in the Pulse chain at the current price of $0.0001 and waiting for the price to grow exponentially in the coming years? In my opinion, it's a possibility with very high chances of success. Pulse chain has everything it needs. What are the fundamental elements to deposit these currencies for such long periods of time? The first fundamental element is to avoid impulsive decisions. By setting a lockup period, I protect myself against the temptation to withdraw my cryptocurrencies impulsively in response to short-term price fluctuations. This helps ensure that my withdrawal decisions are based on more thoughtful analysis and long-term perspective. Historically, many cryptocurrencies have experienced a significant increase in their value over time. Locking my assets for extended periods allows me to capitalize on this long-term growth potential, as I won't be tempted to withdraw funds before they have had the opportunity to reach their maximum value. Additionally, the cryptocurrency market is known for its volatility. By locking my assets, I am protecting myself against the daily market fluctuations and allowing my investments to develop more steadily. This strategy also fosters a long-term investment mindset, rather than being affected by short-term fluctuations. Of course, nothing is exempt from risks. Trusting a platform to store cryptocurrencies long-term carries the risk of technical issues, unexpected closures, or fraud, threatening the security and loss of assets. There is a security risk involving cyber threats and vulnerabilities that, without solid security measures, can expose your cryptocurrencies to hacks, increasing the loss of assets. Regulatory risk indicates that changes in government regulations can affect the legality and viability of investments, generating uncertainty and affecting assets. The market risk lies in long-term volatility. While protection against daily fluctuations is sought, drastic changes in the value of cryptocurrencies can negatively impact investments. Technological evolution in cryptocurrencies could render current platforms obsolete or less secure, highlighting the importance of staying alert to technological changes to preserve asset security. Finally, liquidity risk represents the difficulty of accessing locked funds, especially in financial emergencies, posing a challenge due to the lack of immediate liquidity in critical moments. I must say, without this implying any promotion for the TimePaysMe platform, that after analyzing it, this app takes into account mitigation factors for most of the risks mentioned before. I want to continue by presenting the theoretical framework that supports my decisions to stake PLS and PLSX on the Pulse blockchain for the long term. I will then explain my understanding, and I repeat, my understanding of the crypto market and the criteria used in my investments during 2023 and 2024. The first period to analyze is known as the crypto winter or accumulation period. During this time, prices tend to decrease, experiencing drops of up to 90%. A bearish sentiment prevails and disappointment in the cryptocurrency community reaches its peak. However, it is a widespread opinion, at least among some market experts, that this would be the point of maximum financial opportunity. Now we move to the stage of crypto spring or growth. This is a stage of ongoing innovations, new use cases, and new applications in development. Most people think that cryptocurrencies are dead. Blue chips like Bitcoin, Ethereum, etc. are rising slowly. Investors continue to apply the technique known as DCA or dollar cost averaging to strengthen investments in the face of the new stages. Now we enter the crypto summer or summer stage. In this stage, interest in cryptocurrencies is revived. Bitcoin and Ethereum mainly rise, while other coins and tokens remain almost unchanged. New projects start with good results. Everything starts to go well, everything rises. Everyone talks about crypto. It's the upward point. Now it's time to act intelligently to take profits. Yes, it's the moment to take profits, not to invest. And to close the cycles, now we enter the crypto fall. A completely new set of individuals ventures into seeking income opportunities. Numerous applications and a large number of novel tokens emerge. In reality, what is happening is that the market is beginning to experience once again a phase of decline, entering a new period of crypto winter. It's the period of fall. It's time to wait for the summer and thus restart a new period of investments. Remember, this analysis is for long-term investments, not for casino-type plays. Now we must wait for the next summer to resume investments for the upcoming cycles. In conclusion, this video is solely based on my perspective of long-term investments in the cryptocurrency market, particularly focusing on the Pulse blockchain, PLS, and PLSX cryptos. It does not promote the TimePaysMe platform. However, I must mention that it serves as an excellent tool to achieve my long-term investment goals. Remember, investment decisions should be made cautiously. Stay informed and patient for the next opportunity. Thank you for watching.